welcome to Decentralized Nation, the channel where cryptocurrency is made simpler. Well, today guys we have a new video and it's a bit of a more serious video. Okay, I really thought about whether I should do this video or not. And at the end of the day, I think it's important to address topics, all the topics, even if they are more negative topics. I think it's important to provide you with an analysis of these important topics related to cryptocurrency, because we can also learn a lot from failures, from negative things. And that's why I bring this topic about a failed project in the Cardano ecosystem. No, it's not FTX. Maybe you thought that when I said failed project, but is Ardana. Okay, guys, it's Ardana that have recently altered their development, and the focus today of this video is to answer the question on whether it was a rug pull or not. Okay, was Ardana a rug pull? That's the question I'll be asking, and that's the question I'm making you guys. Please tell me what you think. Was it a rug pull? Why? Just drop in your comments what you think about this Ardana situation, because I would love to have your take. I'd love to have your opinion, and also know what you know about this subject. I think that's very important and will be useful for every viewer of this video. But before going any further, I think it's important to explain a little bit what was Ardana for the people that were not so familiar with this project. Okay, basically Ardana was a project developing in the Cardano ecosystem, in the Cardano blockchain, and was aimed to be a stable coin and a stable swap DEX on Cardano. Okay, very similar to MakerDAO and DAI stablecoin. You probably heard about it on Ethereum. It's one of the most famous stablecoins for sure, and it was a very promising project. They seem professional. They raised a lot of capital from a lot of investors and like credited investors, as you can see here. And they also had like a huge some very interesting partners to work with. This is some of their goals of being fully decentralized, borrowing, store of value against probably DAI. Their version of DAI. And they have also their governance tokens. Their governance tokens, they were in fact already available. They were listed in at least 2, if not 3, major or considerable centralized exchange like Gate.io and Maxi. So yeah, that was a bit strange to have a token launched and so early listed there. And besides that, as you can see here, they have some great partners with MLabs, one of the best if not the best developers in Cardano. You have Indigo protocol that we showed you guys about. We even made a video about their protocol and IUSD for synthetic stablecoin here in Cardano. We had Near, Elrond, Cody that is developing the Jet stablecoin that we talked about also in our previous videos about the stablecoins launching in Cardano. So a lot of people and a lot of great investors as well, like QCP Capital. You have the C Fund, the Cardano Fund. You have Justin Sun, the founder of Tron, and even David Post from Chainlink. Really interesting thing. And they raised a lot of money. They raised $10 million. They also had 3 Arrows Capital that they removed from their website. But yeah, 3 Arrows Capital were their main investors from this funding round. As you know, 3 Arrows Capital was a hedge fund and crypto VC that went bankrupt after the collapse, the Terra Luna collapse, and they were like super leveraged as a firm and invested in a lot of projects. One of them was Ardana. So yeah, a really interesting story, but they altered development. And in the crypto Twitter, a lot of people state that this was a rug pull, a full-on rug pull. And today, that's what we want to understand, okay? But before that, guys, I think it's important to also talk about more positive things that are happening in the Cardano ecosystem. This is a really bad thing when a project just bails on development and leaves every investor behind hurting. But I do think there are great things happening for Cardano, and we won't have this Dana stablecoin. But in terms of stablecoin, I don't think it's problematic. We have some really amazing stablecoins coming, 3 new stablecoins coming. One is already here, that is IUSD, but then we have USDA, we have JET. If you guys don't know about it, I've done a video talking about these 3 stablecoins, and you can probably see it here above. You should really learn more about it because it's super interesting. And one of them is already here. The others really are coming really soon. Besides that, if you guys already want stablecoin in the Cardano ecosystem, you have IUSD for you to use already. And I've done a video about it, a tutorial of how you can buy or even create IUSD from the Indigo protocol. And I'll leave it probably in the description or even in the top here, if you guys prefer, so you can take a look and start using stablecoins. So don't worry, it's not like Ardana failed and now we won't have stablecoins. There are plenty of stablecoins coming, and even from much more reputable projects than Ardana, being honest with you. But yeah, let's go back to Ardana and let's go check their Twitter. This is where they announced the halting of development, as you can see here. Unfortunately, due to recent developments with regard to funding and project timeline, they come to a halt with the development. And they said also that the remaining funds and treasury balances will be held by Ardana Labs, and they are open for other teams to come and continue their project. It would just be interesting to see how much do they still have in their treasury, and if they would really allow a team to come and now that transition happen. That would be certainly interesting. But yeah, here also on the Twitter, they have done a lot of spaces, Twitter spaces. I haven't been able to listen all of them because they are a bit lengthy. This one is 28 minutes, but then you have the other ones, more 28, more, it's a bit lengthy. 2 hours. But yeah, guys, I've been in touch with people that have listened to some of it at least, and I've learned a lot about it, and I've also seen a lot of information from different sources, and that will be useful in our analysis here today, guys. Okay, so let's first check a Twitter that I think really sums up all these Twitter spaces and that we should definitely analyze. Okay, as you can see, here is a tweet from Matthew Jura. Let's give credit to where it's due. And if you guys want to, this is my Twitter. I've shared it before. I've shared this tweet, and I share a lot of other very interesting tweets. So if you want to keep yourself up to date and get the most important news about decentralized projects, this is the right place to go. And the at Decent Nation, don't forget to follow, and it's easier for us to stay in touch there as well. But as you can see here, those are the main points for the failure of the Ardana project. Okay, guys? First, there aren't too many people too early. Okay, let's go through each of these steps or each of these problems and analyze them, whether they are actually good justifications, First one, are too many people too early? It's like, for me, that's a leadership problem, As a leader and with your team, if you're not a capable leader in terms of business development, you should have people that are in terms of strategy, vision, everything. You need to understand your costs. You need to also understand where you're going, and you need to understand and plan for every situation, for bear markets inclusive, It's not like we're going to stay in a bull market forever, and even for just simply bad macroeconomic conditions, we cannot expect to be well all the time and plan with that and plan with thinking that you'll be able to raise more money. You have to plan with all the scenarios in consideration. And in this case, if you are too many people too early, I think that was a bit of a bad leadership problem, and you should add even higher progressively so you can see what people are working introduce them to something that is already functioning, instead of having to build something completely new with a lot of people out of nowhere. Okay, guys? The other one is founder. The founder is in technical art. Is in technical to assess the code. Okay, that's normal. I don't think you need to be a developer, blockchain developer, to do a blockchain company. Like, you don't need to be a tech developer or just a normal developer to do a tech company. I think you could come from other backgrounds, and if you have an idea, do your company. But I do think you need to surround yourself with people that understand that area. You know, you need to have a blockchain expert, some kind of developer that has experience and understands what he's doing, you know. And for me, you could hire him, but I think you should even have him as your founder. You know, you should have stake in the game. You should have invested some money, so that he doesn't want to lose it. And he should stand a lot to gain as well if the project succeeds, to drive him further to accomplish results, you know. So I do think you need that in your project. And if you don't have that, again, that's a failure on your side, and it's not great. You know, how do you expect to do something that you don't understand nothing about? Come on, you need the right people with you, and you need someone that has taken the game and cares about your success. Then the next problem was exchange listings and costs were big. Okay, well, I don't think that's really a good excuse or even an acceptable excuse. I know it's very easy to create a token in Cardano, but why did you create your governance token, a governance token of nothing? Because you don't have anything. You don't have a swap. You don't have the token, the stablecoin you were saying you were going to create. You didn't add anything, and you created a token. But that's fine. It's easy to create a token, but then you're going to spend a lot of money to list that token on exchanges, on centralized exchanges. Why? What's the point? What are people even trading, you know? Nothing, because you have nothing yet. So why don't you focus on development? If you're really serious about developing and serious about creating something, shouldn't that be your priority? And then if you succeed, you can do a governance token of something that actually exists and where people can actually govern. You know, like, I don't know, this doesn't make sense. And being so in such a rush to list in centralized exchanges, for me it's bad, because it shows that you're more focusing like just the token price. You know, you're focused on creating speculation for your token, and in the case it was a bull market, you focus on, you know, just driving off the speculation of the bull market and probably profit on it. You know, you probably just dump your tokens to the people that are trading them, and you know, that's not something that a project that is really focused on development does. You know, that's something that seems more like a money grab, and I think that is a very negative point for the case of Ardana and this case of being a rug pull. Okay, guys. And then we have the question that a large group of investors pulled out. Well, that really sucks, I have to admit. There's nothing to say here. This is really bad. But also, at the end of the day, like, it's not the end of the world. If you really have a project, a good team, and you've done something, you have progress to show for with a small amount of money or a decent amount of money that justifies this progress, then other investors will come. And other investors will want to come in because you have shown that you can do something. It's better than a startup that's just an idea and has nothing. The problem is if you haven't done enough to justify the money you've been given, and then investors won't want to give you any more. And maybe that's why some of the investors pulled out. And again, that is not a justification. It's normal. Why would the investors spend their money in something that is not showing any kind of results for what they have invested so far? You know, I don't know. I think that's my point. But yeah, guys, and especially like in this Twitter threads, Ryan also stated they spent around $7 million in developer costs. That's a lot of money. You know, that's a lot of money. How is it possible to spend like $7 million and have nothing to show? You know, it's really hard, I think, because there are other products that were harder, that were more complex. This is a very complex product, but there are products that were harder and more complex that with less money were able to launch something, at least something on testnet, at least, you know, like, and this project was not. And it's not like they are creating something that never existed before. They even have MakerDAO to follow as an inspiration. Like, and they probably have a bunch of projects that failed, that wanted to be MakerDAO, they could use to learn what not to do. So yeah, that's something also very strange, to spend so much money and have nothing to show. Either you're fooling us, or you're scammed by your developers, and that sucks. That sucks. And that's probably why you should have hired a funder that had tech expertise. That's probably why. But yeah, besides that, we have here, a very, I think, good tweet also from Sebastian, that also shared on my Twitter, where he says everything. Sometimes people forget in crypto, forget that 10 million is an insane amount of money, and it's true. All project, and he even says all projects, even Milk Meta, that's a layer 2 sidechain to Cardano, that is EVM compatible. I think that's so much more difficult to build than what Ardana was trying to build, and they did it. That project plus all the other projects of DC Spark that they have been active developers in Cardano were cheaper than Ardana, and Ardana has nothing to show for. Yeah, I mean, that's already another serious red flag, guys. Another very serious red flag. Now also, here, just coming back to the Ardana tweet, he also blamed Cardano here. In the tweet, they stated it was hard to develop on Cardano, which is not true. Which is not a lie. It's true. I don't know if I can show you guys here where they blame Cardano about it, which I don't think is really fair. And development in Cardano has been difficult, with a lot of funding going into tooling, infrastructure, and security. This alongside with uncertainty, competition. Okay, well, that sounds fishy to me, guys, because sure, it's hard to develop on Cardano. There are not enough tools. The PAB is not working. Man, but there are so many other options available. So the community members have worked and come around and created so many options to substitute the PAB, and that's why we have apps like doing things, going live, like Indigo, like SundaySwap, like MinSwap, because people found solutions. Like, for example, Alexandro from Spacebuds, he has developed like Lucid that you can use to deploy the apps in Cardano in an easier way. So that's just one of the many options they have. So they don't even need to create new solutions to actually code and program and develop on Cardano. They just need to spend some time learning about these solutions, or even just contacting individuals, contacting their partners. They had so many, and understand how did they do that. I think that's what is the most important thing. But yeah, first I'll show you guys here a video that is also very interesting about Ardana, and that for me was extremely surprising. So let's see.
Okay, so subject of today's video is Ardana and Orbis. So these two projects, I guess they shared leadership, were two projects in the Cardano ecosystem. I saw over the last few days some grumblings about the projects having issues, and then on Twitter, tweet came out saying that they have now discontinued operations, or at least they're scaling back to the point where they're no longer going to be able to deliver what they promised they would deliver. I was an investor in these projects through the C Fund, and the C Fund invested a lot of things, everything from Wind Riders to Sunday, amongst many others. And it looks like it's probably a total loss. And what was incredibly distasteful to me was the management of these projects seemed to blame Cardano for their failures. I will remind everyone that Ethereum raised $18 million, of which they only got to deploy $9 million because they lost $9 million to market volatility and didn't hedge their Bitcoin properly. And they delivered the second most valuable cryptocurrency in the world. This was not a funding issue. This was not a platform issue. Looks like it was a leadership issue. things happen. People sometimes don't execute. People make mistakes, and usually there's something left behind for people to salvage from these situations. Good developers, good leaders, code, something. My hope is, as the forensics work their way through, that we as an ecosystem can discover what value, if any, has been produced. Now, my understanding is, having talked to the C Fund, that the first time we were informed that these projects were having trouble was through Twitter at the same time as you guys, which is utterly distasteful, and it shouldn't have happened. You know, and it's a decentralized ecosystem, and the frustration here is that you cannot curate these ecosystems as if there's a single entity running everything. IO doesn't run the
Like, I think this is what I wanted to show, the important part, you know. The first time their investors heard about these problems was when they said they were halting development on Twitter. They didn't even speak with the investors about their issues or about wanting to halt the development. How is it possible? You know, like, if you really want to create a project, if that's your vision, your passion, and you really want to do it, wouldn't you speak with everyone you could before you just throw the towel? Wouldn't you ask your investors like what to do, especially when your investors are guys like Charles and other people on the C Fund that have knowledge and they can teach you what you need or provide you with the right kind of tooling, support, wherever, you know. They had so many good projects there as partners as well they could leverage on, you know, and they didn't. Like, you know, isn't that crazy? You know, you get this confidence from your investments, this trust, and you don't even speak to them or ask for help or anything. You just give up and you take their money. Yeah, for me, this is another very negative part. You know, why don't you speak with your investors and ask for help before you give up? Why? You know, it's very fishy. You know, it smells very bad in the sense that something is going on, you know, and it's either a lot of incompetence or in fact there were bad intentions, and the intention was to take money out of the market, and now that the bull run is over and there's not much money to be made, it's time to go because we are not developing anything. And unfortunately, you know, I was even coming here with this video trying to say that maybe it was incompetence, but now I'm looking at these things all over again, and yeah, you know, I'm starting to even, you know, doubt myself. I don't want to say it was a rug pull because I don't think I'm nobody to give that kind of, you know, verdict. I'm not a judge, you know, and I know things are hard. Blockchain is hard and life is hard, but there were so many things that were done in a very strange way that it makes you think, you know, it makes you think, and these are serious red flags even for the future project. I'm not going to call this a rug or anything, but I think we should learn a lot about what not to do. Okay, what not to do with this project and in which projects not to invest. Okay, but before that, I also want to show you the last part. That is Ryan Matovu itself. He was the founder of this project, the founder of Ardana. That's a project we're focused on right now. We're not focusing on Arby's. And basically, let's see who is this guy, you know, who is this amazing person, or I don't know, amazing person, but amazing at pitching, I guess, at least, to be able to raise $10 million besides everything else. You know, it's really interesting. Well, sorry for this. Just LinkedIn messages asking me for stuff. So we'll see your Ryan Matovu. And we'll see his experience. He doesn't even have his real photo here. I can try to look it up to you so you know the guy. Ryan Matovu. Let's look it up. And I'll show you the guy. This is the guy, okay? This is the founder of Orbis and Ardana. Ryan Matovu. Okay, but yeah, let's see basically what is his experience of Ryan Matovu. So probably had a lot of experience to do this, right? Maybe in business development, as he was not a technical guy. But we can see here, we have his job at Orbis as the founder. We have his job as Ardana as the founder. And then we have just 2 internships. 1 month internship as an asset manager. And then another internship as a CEO. Like, I don't want to be mean. But how is it possible that VCs are giving $10 million to a founder which has no experience at all? Like no experience at all. I don't want to be mean to him. And his experience is like in what? He's CEO. I think this CEO London is like a CEO school. So that's his experience. So marketing, kind of a very tight niche of marketing. Well, CEO, it's good. You know what trends, and then you can build your projects in what trends and make money. But yeah, I mean, that was really fishy as well, and very, very strange, guys. Very, very strange. But yeah, at the end of the day, there are some things I have to admire about this guy. One thing is that he came up to the Twitter space and did his talk, and that he has the initiative to go after things, to raise money. It's just a shame if that initiative is not to build products, but to profit on the goodwill of people that really dream about creating a better world with these kind of applications, yeah, I think that would be really bad. But I do think we learned some lessons here. I do believe that, what he did is like coming to the Twitter space, to the Twitter spaces and talk with people. I think is good, a good action from him. But and might indicate, or maybe not, that he didn't have the knowledge and capacity and skills to lead the project. But I don't think it's enough. I think he needs to show the code, but more than just showing the code, he needs to show where the money was spent. How exactly the money was spent in a verifiable way. Show the current assets they own, the current treasury, and show exactly the investors why was that money spent there. Like $7 million. What kind of contracts did you add? What they were supposed to develop? What did they develop for that money? I think that's really important, and that's the only way to clear the suspicion of a rug pull over this project. And if Ryan Matovu wants to work on crypto and keep building projects, I think he really needs to do that. He really needs to do that. So you just share this video so that this video can get to Ryan Matovu. And also, if you like this kind of analysis, just subscribe. We are not done yet, but just subscribe and turn on the notification bell so you don't miss these videos and other very valuable videos about projects in decentralized blockchains. Above all, that's what we like, the decentralization. But yeah, guys, I think like coming back to the topic of Ardana, I think, yeah, maybe this was a Rugpull. I don't know, smells like it, but maybe it was just incompetence. I want to give Ryan the benefit of the doubt. Although I do think, Ryan, if you want to prove yourself that you are not a rug puller, you should really show things, show what happened. And if you did a mistake because you didn't know better, just admit it. We all do it. I do mistakes here every day in this YouTube channel, and I just started it. So yeah, it's part of life, and that's okay. But when we fail, we need to own our mistakes. That's the important thing. We need to own our mistakes, and now you need to own yours. You didn't communicate good enough before, so you need, if you really have good intentions, you should communicate now to compensate for what was lacking. But yeah, I think it shows the importance I think we learned a lot of lessons, like the importance of having more transparency and communication in the project. And it also shows that we need to really be careful about the teams that are behind the projects. What kind of background do they have? and also like what kind of actions are the project taking? You know, is this project just trying to create hype, or is it actually showing that it's developing something, doing and communicating with the people? You know, and we should make a separation and invest in those projects to communicate and show progress, and the projects that just show hype and focus on price development, on listing on exchanges, on price growth, etc. We should just run away. Run away from them as we can, for sure. You know, I think it's very exciting to be in an ecosystem like Cardano and to invest in these early stage projects, but it's also very risky, guys. It's also very risky, and we all dream of you know, finding the right projects that will change the world. And of course, there's also the financial benefits that come with that, besides just feeling good for investing in something we believe in. But like, we need to be really careful, guys, and that's why I'm making a video for you guys about the article I've seen very recently, that from, I think, the Cardano Foundation. It was a super interesting article of red flags to avoid in terms of projects, early stage projects. And it's not financial advice at all, but I think it's pretty interesting educational content, and you might get some good ideas for you to use when you're doing analysis. So analysis of projects and before you invest in them. So like, if that's something you're interested in, just please drop a comment, and of course don't forget to subscribe, turn on the notification bell so that you get a notification of this video. And yeah, guys, I think summing up, I think this Ardana case either looks like a rug pull or a cash grab, temporary cash grab, or then a lot of incompetence. It's one of the two case scenarios, and we'll see which one it is with the development of time. And if I see Ryan Matovu cooperating, showing what they have done, and really being open and communicative about this, I think it was just something that went wrong. They had some bad luck and some incompetence, and they couldn't do better, and they failed. But they will learn and come back stronger next time. Or if they don't, then it's likely to be a rug pull. I just have to say things by what they are, even though I don't like to put myself in this position. I think I need to be honest with you and tell you what I think, but of course it's my opinion and I might be wrong. Okay, guys, never forget that. So thank you so much for being here, and I hope to see you soon in the next video, guys. See you.